Why Scandinavian banks' clean reputations are threatened by dirty money. Frankfurt U. Scandinavia has long had a reputation as one of the most progressive regions in the world, known for an ABBA. So it has been a shock to see Scandinavian banks mired in a growing money laundering scandal, accused of helping Russian oligarchs, corrupt politicians, and organized crime lords send hundreds of billions of ill-gotten dollars to offshore tax havens. Danske Bank, the largest bank in Denmark, was caught first for suspicious activities at its subsidiary in Estonia and, in the past couple weeks, the scandal has spread to Swedbank and its subsidiaries in the Baltics. Swedbank's chair, Mr. Idremark's exit came less than a week after the bank fired its chief executive, Birgit Bonnesen, who had previously supervised Swedbank's operations in the Baltic countries. The revelations are stunning for what had been respected institutions. How did the Swedes? Here are the answers to those and other questions. For a Danish bank, trouble in Estonia. Danske Bank has admitted that its Estonian subsidiary helped thousands of customers, most of whom were not residents of Estonia, to launder tens of billions of euros from 2007 to 2015. Over the years, Danske Bank managers ignored or played down warnings about suspicious transactions by Estonian regulators, the Russian central bank, partner banks, and its own internal auditors. The Estonian Danske Bank did not acknowledge the problems until 2017, after Danish media reported on them. The full scale of How did Sweden come under scrutiny? The allegations against Swedbank, which also involve its operations in the Baltics, have come to light in recent months after. But the New York in February, the department sent Swedbank's New York subsidiary a letter with extensive questions about transactions involving Russian businesspeople and officials, offshore companies, and banks in Ukraine, Cyprus and other countries that have been considered money laundering hubs. The action by the New York regulator is part of a larger inquiry stemming from the activities of Mossack Fonseca, the law firm whose efforts to help the super-rich avoid taxes were exposed by the so-called. The report by Swedish television suggested that Swedbank had also been a conduit for payments by the deposed Ukrainian President Viktor Yanukovych to his erstwhile advisor, Paul Manafort, the former Trump campaign chairman who has been convicted of tax evasion and bank fraud. A spokesman for the Department of Financial Services would not comment on the connection to Mr. Manafort, but the regulator's letter to Swedbank in February requested information about transactions involving Mr. Yanukovych. Swedish prosecutors say that the country's statute of limitations prevented them from pursuing money laundering charges against Swedbank since the suspected activity ended in 2014. But they are conducting. Unnamed Swedbank employees are suspected of tipping off a select group of large investors that a scandal was about to break, a possible violation of insider trading laws. Last week, Sweden's financial industry regulator, known as Finansinspektionen, is also investigating, as are the Estonian authorities. Swedbank declined to comment. Why are American investigators involved? The Justice Department and other American officials have long done the heavy lifting when it comes to money laundering enforcement in Europe. That is because almost all big international banks, including Danske Bank and Swedbank, have subsidiaries in the United States that they use to process transactions in dollars. That gives federal, European lenders like ING Group in the Netherlands, Deutsche Bank in Germany or BNP Paribas in France have paid $16 billion in fines for money laundering infractions or sanction violations since 2012, according to more than 3/4 of that sum was imposed by the Justice Department or other American authorities, Moody's said. The dominance of American investigators reflects the conflicted state of European enforcement responsibility. The banks and supervisory authorities have been very complacent, said Nicholas Vroom, a senior fellow at Bruegel, a think tank in Brussels, who follows banking issues. The system has failed. As the Soviet bloc fell, so did banking barriers. The collapse of the Soviet bloc almost 3 decades ago opened up Eastern Europe to Western European banks. It was virgin territory with millions of customers who previously had little or no access to credit. And the Western European banks carved up business along geographical and historical lines. The Scandinavian. At the same time, Russia evolved into a crony capitalist economy, breeding oligarchs and officials who wanted to move money to havens outside the country. A logical place, Danske Bank became a major force in Estonia in 2007 by acquiring the Finnish bank Sampo, which had a large foothold in the country. Sampo's but Danske's oversight of the Estonian subsidiary was weak. Many of the some customers were known criminals, or the money came from banks notorious for money laundering. Large numbers of further complicating matters, Danske allowed its Estonian operation to maintain a separate information technology system. Many documents now, operations that once seemed like lucrative outposts on the frontiers of capitalism have turned into liabilities for the Scandinavian banks. Danske pulled out of the Baltics earlier this year. Swedbank reporting was contributed by Emily Flitter in New York, Stanley Reed in London and Christina Anderson in Stockholm.
Raindrops, truck top smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park, pot.